Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies, Palantir Technologies, and Nio Stock. We will be discussing a multitude of articles to where the first one is titled, Sofi, False Sense of Risk Creates an Exceptional Opportunity. Rating Upgrade. After that, we'll move on and we'll talk about the top 5 institutions which are buying up Sofi stock and adding it to their overall portfolio, which is a very bullish and positive development for this overall company. After that, we'll talk about Palantir Technologies in regards to one green flag for the company and one red flag that investors need to be aware of before they do their own research or purchase this company to add it to their portfolio. We will also be discussing how Cathie Wood of ARK Invest could continuously add Palantir Technologies and their PLTR stock to her portfolio regarding her plethora of very innovative ETFs and how this could reflect very positively on the overall PLTR share price. Lastly, we'll discuss Nio Stock, ticker symbol NIO, regarding how they made a huge investment in a nuclear fusion startup company, which should reflect Nio's overall positive sentiment regarding the energy sector. We'll also be discussing the 5 institutions which hold and are betting big on Nio Stock and what investors can learn from this giant development and catalyst. We'll also be discussing their price target to determine whether or not they are a good buying opportunity right now. So for more videos on Sofi Technologies, Palantir Technologies, or Nio Stock, don't forget to go and obliterate that like button. Literally, go ahead, press it or tap it right now. Don't forget to become a member of the channel by clicking or tapping on that join button to support me personally for as little as 99 cents so I can continuously stay here on YouTube making videos for you. And then lastly, if you like what you see, don't forget to subscribe. But with that being said, let's jump right into today's stories. Sofi Technologies is a fintech company or a financial technology company that operates as a digital bank. And recently, they have received a lot of downward pressure regarding their overall share price due to a multitude of bearish negative catalysts and pressure, such as one analyst decreasing their price target and their overall price rating. But this author believes that the Sofi share price has fallen too much and now it's a great buying opportunity. He says that Sofi will be exposed to significant risks. However, the main reason for the bearishness and negativity surrounding Sofi Technologies is their exposure to unsecured personal loans. However, the author of this article believes the risk is manageable and therefore the stock has sold off too much, meaning that it's a good buying opportunity because once it inevitably bounces back, that's when investors are really going to start seeing fantastic returns, which is why he has upgraded his overall rating on Sofi Technologies to a strong buying opportunity. And when we are done analyzing this article, I will add my own personal opinion. He very correctly cites how the loans that are held on their overall balance sheet have increased from 13.5 billion up another 2.3 billion to 15.8 billion. So why is this bad news? Essentially, Sofi Technologies keeps these personal loans on their balance sheet for months so they can get interest income from these loans. However, then they actually sell these loans off in their totality to other financial institutions. But since Sofi lately has not been able to sell these loans and they're keeping them on their balance sheet, this does increase the amount of risk Sofi is exposing themselves to, because if any of these borrowers defaulted on their personal loans, such as if a recession happens and people are laid off from their overall jobs, that means Sofi Technologies will have to float the bill for this money. Now, despite this, there has been very positive news updates, such as their deposits increasing by another $2.7 billion sequentially to where it now exceeds $10 billion for total deposits. Total deposits would mean people that are joining Sofi Technologies, making it their primary financial institution, so they are holding money in checking accounts or savings accounts, and that would count toward the company's overall deposits, which is good news. We also see this because they are adding new members to where now they total around 5.656 million total members, up approximately 433,000 members sequentially. So it's very good that we are seeing a very positive uptrend in their total deposits and how that is going hand in hand with the amount of new members that they are bringing in. But let's go back to their personal loans because that's what people are concerned about. Let me remind people again, and the author of this article does this exact thing. The management team has told us that the personal loan borrowers' average weighted income is $164,000 $100,000. And these customers have a FICO score of 747, meaning that it is extremely unlikely that these types of people who are getting personal loans from SoFi Technologies will default or not pay back their overall loans. They are making an extraordinary amount of income and they have a very high credit score, meaning that they are very unlikely to default. So although yes, SoFi is building up a large loan portfolio, which does add risk, they are getting income from this, which is going to impact their financials positively, and the risks aren't as high as people think because the people who are borrowing from SoFi are very fiscally responsible and are unlikely to default on these personal loans, meaning that the risk for SoFi holding these loans is a lot lower than people originally thought. And the author also lays out, as time progresses, he expects the economy to normalize in 2024 once the Federal Reserve stops interest rate increases, which will then catapult and cause growth stocks to surge upwards. So he believes this current sell-off due to short-term negative volatility is unwarranted, making right now a great buying opportunity for SoFi shareholders or people who want to get into SoFi stock. For me personally, I think that this company is a very good company. However, please do not overexpose yourself too much to any singular risky growth company, including SoFi Technologies. I personally only have a 4% allocation to this company, and I don't want to increase my position more than a 5% portfolio allocation because anything above that would be improper risk management, because then I would be taking on unnecessary risk of potential losses. So if you want to practice proper risk management by being a smart investor, it's a good rule of thumb to not over allocate yourself more than a 5% initial portfolio allocation to any singular risky growth companies. And that would include SoFi Technologies. SoFi currently trades for around $5.20, while the very bearish negative analysts believe the company could fall down to $2.50, while other analysts believe the company is worth between $8 to $10. And I personally gravitate more towards that $8 price target and price prediction for SoFi stock. But now let's talk about the top 5 investors who are betting big on SoFi stock, meaning that they are extremely confident. If you weren't already aware, the CEO himself, who is running the company, has purchased millions of dollars worth of SoFi stock. He recently purchased on May 15th 108,000 shares at $4.67 per share, and throughout the year of 2023, he has bought approximately 432,000 shares. But that's not all. Let's talk about other large institutions who are buying SoFi stock, and according to the 13F filings, this is what we get. We have Vanguard, which is a very prestigious financial institution owning 69.56 million shares. BlackRock, another fantastic institution, owning 35.82 million shares. Silver Lake Group, owning 31.1 million shares. State Street, owning 12.11 million shares. And Nio Capital Management, owning 12.05 million shares. So overall, these are very prestigious financial institutions that are betting big on SoFi Technologies. However, like I said, the company is currently trading at $5.20. The low end price target is $2.50 over the next 12 months, while the high end price target ranges between $8 and $10 per share, but I'll leave that up to you depending on which one you personally gravitate toward. And always make sure to do your own research and don't overexpose yourself to any singular risky growth company, including SoFi Technologies. Moving right along here, let's talk about the latest news updates for Palantir Technologies. Palantir Technologies is a big data and analytics company and an artificial intelligence technology company that serves both commercial enterprises as well as government clients. So we'll be going over something that's really great about the company and something that investors really need to be aware of. Starting right off here, recently the share price is currently trading for close to $11.46 because the share price has been surging as of late, which is good news for shareholders. And I would always encourage people, after an initial increase such as this, you need to be prepared for an inevitable pullback after a giant increase in the share price. So don't forget to take profits off the table and get some money, especially if you are in the green for this company. Palantir originally soared for 2 main reasons. One, they had an amazing earnings report where they brought in revenues of $525 million, even though they were only projected to bring in $506 million, so they beat on their revenue estimates, and they brought in 5 cents per share for earnings. So an EPS of 5 cents, even though they were estimated to bring in only 4 cents. So they beat on both revenues and earnings, which caused the share price to surge upwards. Other catalysts for this company is the excitement surrounding artificial intelligence and how Palantir Technologies has initiated and released their AIP, their artificial intelligence platform. So it's a huge green flag that this company has beat on their revenues, their earnings per share, and released a new artificial intelligence platform, especially now that people are talking about artificial intelligence all the time. Also, I want to say that their United States commercial customers increased by around 50% year over year for the first quarter, reaching 155 customers, while their revenue grew for this segment by 26%, and that is very positive. They posted $17 million worth of net income, and this was their second consecutive quarter in a row that they brought in GAAP profitability, which is very impressive, and they are anticipated to be GAAP profitable for literally the entire year. The CEO himself, Alex Karp, is very excited about the company's artificial intelligence platform, or AIP, regarding the services and products that they will now be able to offer various enterprises and government agencies. Palantir is still in the early stages of trying to seize the very large artificial intelligence market, and it appears to be on track to do so. However, the red flag is that their growth projections have not been very accurate. For instance, originally management forecasted that the company would bring in a CAGR, or a compounding annual growth rate, regarding the revenues of 30%, which is astounding. That's very positive. And they were supposed to bring in this CAGR of 30% from now until 2025. However, based off of current projections, they're only supposed to grow their overall revenues and sales between $528 million to $532 million in their earnings report coming up, which would represent a 12% year-over-year incline. While for the full year, they're supposed to bring in between $2.19 billion and $2.24 billion, which is positive, but that would only represent a 16% CAGR, not the 30% that we were initially promised. So these projections clearly have not been changing for the better. Now, we can attribute some of this to macroeconomic headwinds regarding the overall economy, which is struggling right now, which has poured over into the revenues and sales of companies like Palantir Technologies. However, it is clear that their future is quite bright, but they are trading at rather expensive accounting ratios. For instance, Palantir is valued at approximately 55 times their non-GAAP or adjusted earnings and 11 times their sales, meaning their PS multiple is over 10. We want that under 10. However, if you have a high risk tolerance, this company, according to bullish investors and analysts, believe the company could be worth around $15 per share, while other investors and analysts think the company could fall below $6 per share. So this really just depends on what your personal strategy is for this company, how long you're willing to hold it, and always remember not to overexpose yourself to any singular risky growth company more than a 5% initial portfolio allocation, or at least to use that as a good rule of thumb, and always make sure to do your own research. Essentially, if you have a high risk tolerance and you expect the company to score big in artificial intelligence in the future, then feel free to dip your toe in or nibble at this company if you are not already overexposed more than 5% allocation. However, right now, I do think the company is rather overpriced, and I anticipate a pullback in their overall share price, and that would be a better time to nibble at this company once their share price lowers, because that would lower their overall accounting ratios. That would also mean that investors who do not have a high risk tolerance, such as myself, should steer clear of this company and just currently hold your position for now. The good news is actually Cathie Wood has been slowly adding more Palantir to their overall portfolio, despite other classifications of quote-unquote big data and analytics company, such as Snowflake and other companies. No one can actually replicate the analysis and artificial intelligence that Palantir offers, so they really stand alone in this respect. However, it would be up to you to justify if it is worth investing into Palantir Technologies, given that no other product directly competes with Palantir Technologies. However, they are trading at a very large premium right now, and you may have to hold this company for quite a while before you start to see major profits. But that's why you always need to make sure to do your own research to make sure this company aligns with your own risk management policies and your investing style, and other variables that you could run into. Next, let's talk about the electric vehicle company named Nio, which recently made a huge investment in fusion technology regarding Nio Fusion. Nio invested 995 million yuan in Nio Fusion for almost a 20% stake. On top of that, Nio's chief executive, named William Li, has also invested 505 million yuan for a 10.1% share. So collectively, between Nio's chief executive, William Li, and Nio themselves, they own 30% of this overall company, which is exploring fusion energy, which could benefit Nio in the long term, especially as other companies start to come up with other ways to propel vehicles, such as hydrogen vehicles and other types of energy. Currently, the NIO share price trades for $7.82, while the average analyst believes this company should be worth almost $15 per share. The lowest price target on this company is $10, while the highest price target is $25, meaning that the current share price of $7 technically is undervalued right now, making it a phenomenal buying opportunity. But I do want to warn investors, this company is not anticipated to become profitable until 2026. So you're going to be holding on to this company for a little bit before you start to see major returns. However, the good news is that by the third quarter of 2023, this company is supposed to really ramp up their overall financials, and I think that's going to cause the overall share price to surge, at least temporarily, meaning that they're going to be on a very positive trajectory from then until 2026. But always make sure to do your own research. Lastly, let's wrap off the video talking about their top 5 investors, which would be Bailey, who owns 120.13 million shares, BlackRock owning 61.95 million shares, Vanguard owning 47.62 million shares, State Street owning 28.23 million shares, and Goldman Sachs owning 19.13 million shares. So again, these are very prominent and prestigious financial institutions that are holding this company, even though Nio is extremely risky, because remember, you have to incorporate their geopolitical risk because they are not a United States company, and China has just different accounting principles than we do over here. So there is a lot of risk for this company, but overall, it seems this company could be a company to keep on a watch list at minimum. But I would love to hear your thoughts on SoFi Technologies, Palantir Technologies, and Nio stock. So with that being said, don't forget to go and annihilate that like button right now. Comment your thoughts down below. Don't forget to become a member of this channel to support me personally for as little as 99 cents. Literally, you're not even going to feel it, and that's what keeps me here on YouTube. And if you enjoyed these videos, don't forget to subscribe. With that being said, I will see you in the next YT video.